Okay, let's move on and let's welcome on board Sanjay Gupta, CEO at Star Cement. Cement really has been the darling of the market, and why not? So let's take status check of what really is happening on ground. Sanjay, hi, good morning. Good to have you on the show. Just looking at the year-on-year volume trends, it seems that they're going to be strong because of the low base for the fourth quarter. Give us a sense of how volume offtake has been in this quarter so far, and if you could give us some color on how the month of April so far has been.
So the volume in quarter four has been good, I will say, as compared to the corresponding quarter last year. It has really performed well. I will say that because of quarter three and quarter four, the full year overall 2021 looks really positive. I think in Eastern India, overall East will actually be closing either flat for the full year or marginally about 1% or 2 in the positive side. On an all India basis, I still feel that overall the volume growth will be somewhere either negative about 1 or 2% or flattish. So that has largely been contributed by the volumes which has picked up in quarter three and quarter four. April till now has been pretty good. Once the trend has already been set in, as I said, most of the demand is largely been coming from the rural India, and also off late in quarter four, the urban markets have started picking up. So looking forward, that FY22, we are hoping that we'll again come back to the normal growth trajectory of around 6 to 7% in Eastern India and around 5% in the entire country.
Okay. What about pricing trends? Because as we understand, they've been fairly resilient all throughout the country. What is the key reason you think for this strong pricing? And more importantly, would the pricing uptick actually continue going into the next quarter as well?
So I think the pricing uptick which we have seen in quarter four is largely to do with the downtick which we have seen in the monsoon season, which is in quarter 2 and quarter 3. So this is a normal trend which always happens in cement, because cement being a seasonal industry sees a price reduction during the monsoon season, and there is a price catch-up which takes place in quarter 4 and quarter 1. So we have seen that till now. Hopefully in quarter 1 also the trend is likely to remain strong, primarily because of 2-3 reasons. One is definitely there is an input cost pressure, as the coal and the coke, the prices have actually gone up from whatever we have seen in quarter 2. And even the fuel prices are actually impacting the freight cost across board. And these cost increases are being passed on to the consumer. So demand being strong as it is, cement companies would like to pass on these cost increases. So looking at that and looking at the demand scenario, we hope that the prices will remain firm in at least in quarter 4. Quarter 1 and quarter 1 also.
Okay. Okay. In terms of growth drivers of demand, do you feel it's been more homeowners, or has it been other segments? Where are you seeing the maximum traction?
So if I speak about quarter 3 and 4, largely it was driven by rural segment. But of late, on the later part of quarter 4 and in April onward, we have started seeing a lot of demand coming from the urban segments. So I'm saying that there are a lot of work which has started going into affordable housing segment, and overall retail, I will say retail housing segment has actually picked up. That is also fueling some demand. The government spending, as far as the East is concerned, there has been good amount of government spending which has happened in quarter 3, 4, and it is continuing in quarter 1 as well. So that is also helping the demand scenario. As of now, we hope the entire demand scenario to continue in coming quarters.
Okay, fair enough. And going forward, you've also started commercial production at the new unit in Siliguri, West Bengal. The current utilization there, what's that looking like?
So yeah, we have started a Siliguri grinding unit in January, I said January 16th. And we are slowly ramping up the capacity. I think we are operating as of now at 35-40%. Hopefully in quarter one and quarter two, we will ramp up the entire production line, and that will start giving us our desired level of capacity utilization of around 65-70% in FY22.
Mr. Gupta, give us a sense as to what is going to be the impact of on your margins from the rising pet coal prices, coke prices, as well as the fuel mix and coal prices.
Yeah, I think, overall coal prices, we are largely not importing anything from outside. So most of our coal requirement are now being sourced from Coal India, which is Eastern coal fields. Even the Coal India prices, we have seen there is an increase of at least 10% in overall basic coal prices by Coal India itself. So that is going to have an impact of around 100 rupees a ton on us. But we hope that looking at the demand trajectory and looking at the overall growth which is happening in retail segment and also in the entire construction segment, we will be able to pass on this price increase in quarter one and as well as in the entire FY22.
Okay, and finally, give us a sense on the overall demand mix in terms of trade and non-trade demand trends, and your overall logistics issues. Have they been completely ironed out now?
Yeah, so we have faced some logistic problems in quarter three that did continue in quarter four as well. Because of the cracks in one or two bridges which actually connects Meghalaya to Assam, and those are the areas where we have faced problem. All those issues have already been sorted out. We are back to full dispatches. As of now, the capacity utilization for our Meghalaya and Guwahati plant is around 95%. So we are back to normal. And overall trade and non-trade mix has all, for us, we are largely a trade-driven company. So we have always been selling around 80% of our volumes. So if I look at the entire FY21, we have sold around 85% of our volume in trade segment and only 15% of our volume in non-trade segment. That continues for us. And we continue to focus, even from Siliguri plant, we continue to focus largely on the trade segment. Because we have launched Siliguri plant in January itself, we have taken one of the Bollywood icon, Akshay Kumar, as our brand ambassador to push our branding strategy in Bengal and Bihar. So trade has been our forte. And even the demand in non-trade is also not bad, as I said. There are projects which are coming up. Even NHPC in Northeast has rolled out a tender of 2.5 lakh tons of cement. And so hydel projects are also contributing. So overall, non-trade demand is also picking up. So that will help the overall demand scenario in entire East and also as well as in the entire country.